Good afternoon. This is Tim Barnby from the Trend Follower FX. I want to go over my weekly results with you and show you a couple of things about the new service offering. First, I'm going to start here with Euro USD. I'm going to go over current trade status. So the trades that we currently have open, the Euro USD is currently up 1,239 pips. As you can see, there's really no sign of this turning around anytime soon. When we get one, we will get out. But not yet. I also want to mention, just for the service offering, um, look at all of the opportunities you had to actually enter this trade at my recommended price. And you can see where my recommended price is because this is where I actually got in. Right here is where the signal was actually sent. Right there, wherever you see the red arrow there. You can see that you had 2 days to actually enter that trade, here and here. And then you had another opportunity right here for these 2 days to actually get in. And then you had a 4-day window right here to actually get in the trade again. Once again, I mentioned last week, because of this gap, I did not go long here. That's one of the rules of my entry and exit. I don't make trading decisions when there are gaps, or based on open gaps. Okay, so here we go. We're back still in here, entered again here, and we're still in the trade. And it's going to be in the trade for quite some time. We'll go on here over to the GBP USD. We are currently up 628 pips. We entered this trade right here. We also had multiple days to enter this trade. You can see you had 1, 2, 3 days to actually enter this trade at my recommended price. I also like to mention you can enter these trades anywhere. You can enter these trades at, I don't care if you're 1,000 pips away from the entry, you can still enter the trade. The market is still going in that direction. That's what we do with this service. We get in a trade, and we stay in the trade until the market is done giving us money. Okay, on to the Aussie. The Aussie is currently up 227 pips. Not exactly where I'd like to be, but we did have that crazy day. And you can see we got in right here. We had 3 days to enter that trade. 5-4 through 5-6 we could enter this trade. Plenty of time. There's no need to rush to your computer when I send you a trade. You have plenty of time to get in. And here we go. We're still moving down. It's still in a strong downtrend, and we'll see what happens. If it turns around, we'll go the other way. On to the Euro Pound. We got in way back here on the Euro Pound. We had a 3-day entry window. 1, 2, 3 days to enter that trade at my recommended price. A little tiny bit of a slip here if you wanted to get in on the 4th day. I know people, some of my clients have gotten in down here. They're more than happy to get in down here. Because they know this is going to continue to move because of the way we enter these trades. It gives us a great opportunity to keep entering, and you can enter on every one of these candles if you want. I don't. I enter one time, and then sometimes I'll enter again on a pullback like this. I did not this time. Okay, so currently our open trades are 2,483 pips in the positive. Those are all the trades that I currently have open. And I'd like to mention that at 1-to-1 leverage, that means for every $1,000 in your account, you open a $1,000 position. The current trades represent over 25% in equity. So just these trades alone move your equity up 25%. All of the current trades offered multiple day entries. You had plenty of time to get in, and every single one of these trades could have been entered at any time, including today. You could enter these trades. You enter them at the current price, and the price, because price is moving in that direction, we're saying that it's going to continue moving in that direction until the market tells us something else. Now, I want to talk a little bit about something else that I'm offering with the service. And these are London breakout trades. I'm going to be doing these a couple of times a week when the market offers them. This little box right here is the session that I'm trading the breakout from. And what we do, we actually do a straddle on this because it's safe. We're going to place a long trade for a breakout up and a short trade for a breakout down. Red line symbolizes where I would sell. Green line symbolizes where I would buy. And the gold is where I take profit. The gold lines. Now, what we do, this is different from other straddle systems in that we don't do a one cancels other. We leave the opposite side in until this side takes profit. As you can see, when this broke out, it broke out long. It went up here to within probably 20 pips of our target and then turned around and then stopped out right here on the red line. But then at the same time, we sold and we took profit very quickly. Now, when we did that, what it did was it recovered this loss. So on this trade, on this pound trade, we were even for the night. Now, of course, you lost the spread. Okay, now let's go over here and take a look and see what happened on the pound yen. Same window, same breakout strategy. This had a very big range for this day. The breakout range was 200 and I believe it was 220 pips or so. Let's take a look. Yes, it was. It was 218 pips. The trade went up here. It did not break out long, and then it took off short and took profit. So for this day, we were break even on one side, and we were up by 226 pips on this trade right here. Very, very, very safe, very sane method of trading for London breakout. Okay, now I want to show you a little bit here with regard to the London breakout. This is the page that you would be looking at for entering these. You would go here. You're going to see the buy and the sell. You're going to see an entry, a stop loss, and a take profit for each one. And you're also going to see the date. I don't post these every day. If you looked at the pound yen as an example for today, the range was insane. It was about 400 pips. I wasn't going to place a 400 pip trade. Excuse me, it sounds like MetaTrader went off. I also put some recommendations and some guidelines for actually trading this data right here. So there's that. Now I want to show you my performance page too very quickly. When you look at our performance page, you can see that I have a summary right here for the rated period. This is going everywhere from September of 2008 through 1 May of 2010. And this is just the total return in pips. It's telling us, what the value of a $10,000 account would be today. The max drawdown period. So this is the biggest dip we've ever had. You can see right here is our equity curve. And the biggest dip we've ever had from peak to valley was 567 pips, which sounds like a lot, but it's really not when you're looking at this kind of equity growth. We have never been negative in this account. This started here at 10,000. You can see this little tiny move right here. Moved way up immediately. Let me open this chart. You can see the first trade in this system moved way up. And this is the actual equity curve for this account. So, okay, it was 567 pips. It also it has the period in which that took place, 5/7 to 6/5, where we actually had a few losses in a row and we weren't opening any new trades. The average losing trade is 165.5 pips. The average winning trade is 431.2 pips. We've had 19 winning trades, 9 losing trades. That's a winning percentage of 68%. And the portfolio expectancy is 239.93 pips per trade. What that means is that you can expect to make, based on past performance, you can expect to make 239 pips, 240 pips per trade.